Hey, welcome in. Jordan Aubrey here. Hey, we're talking about trade lines again. Another question that we got, and I want to definitely make sure if you're doing this business, I want to make sure you're doing it the right way. I want to make sure that you're not going out there and worried about things. I want to put certain worries to rest and just allow you to make money, man. That's what it's all about. Just making money, impact people, give like you never gave before, save like you saved, right? Invest the way nobody else is investing, but you can't do that until you first have a little coin, right? So with that being said, you can do it, but you get what I'm trying to say, right? So I want to jump right into a question that I got. Here's the question. Hey, I'm currently in the market to purchase another house via 1031 exchange. Kudos. That's real estate investing, people. That's real estate investing. 1031 exchange. I also have about 6 to 8 credit cards, all in good standing, about 5 to 10, 15K average limits. Responsibility, I love it. I love it. So here's the question. Will doing a trade line affect me getting approved for another mortgage? So obviously I want to break down exactly what a trade line is. Again, broke it down in previous videos, but just want to break it down. It's when you add somebody on your credit card. He got 6 or 8 of credit cards, all in good standings, 5 to 15K limits, but he's adding people to these trade lines, and he's wondering, is this going to affect him going out and getting a mortgage? So no. When you have a trade line, what shows up on your credit is exactly what would have showed up on your credit if you didn't have anybody as a trade line, right? So a trade line is when somebody else piggyback on your history, but that don't necessarily mean it's going to change your particular history as far as what you got right now. So when we're talking about going and getting a mortgage, really the biggest thing they're going to look at is there's some qualifiers out there. If you go through a traditional bank, really the only thing they're going to look at is debt to income ratio. And as long as you make enough money, most likely you'll be able to go do, especially a 1031 exchange where you're taking a big lump sum and going and putting it into a newer property, nicer property, bigger property. So with that being said, no, it's not going to affect you going and getting another mortgage as long as your debt to income is right. You have that big lump sum of money where you're putting down on the property. As long as you're on the right side of equity, it shouldn't be a problem, because banks, typically 9 times out of 10, banks is going to look at that asset as well. And if they're on the right side of that asset, they're going to be more comfortable with lending on it. And 1031 exchange, I don't know whether you're refinancing are you selling a single family to get a duplex or a quadplex or a 6 to 8 to 12 unit apartment, or maybe 40 unit apartment. I don't know how big you're going, but if you're going bigger, it should produce a little bit more. So one of the safest things for a bank to lend on is a home, because it's a hard asset, right? I'm not going to go in there and give you a loan for you to invest in a stock market. Too volatile. It could go up and down any day we look, right? So with that being said, we're not going to give you any money for that, but for a house that brings in money every month, that covers a mortgage, right? That is something that we can use to actually allow you to go out there and purchase a property. Now, from a bank perspective, when I'm saying that from a bank, when I say we, I'm not a lender, I'm saying what banks look for. That is something that they can actually use and put out there for you guys. But real estate works, right? So a 2 unit, 4 unit, 6 to 8, right? The bigger the unit is, the safer the investment, because it's very hard, right? When you got a 1 unit house or just single family residential, it's very hard because that property only brings in $1,000 to $1,200 a month. And sometimes it can fluctuate and go $2,200, whatever the case may be, depending on how nice that particular property is. But most times there's going to be about $500 between the mortgage and the cash flow. Meaning, if somebody moves out and you got to put paint and repairs into that particular property, you're essentially losing money because nobody's living there, right? You're paying money on paint, you're paying money on anything else they're fixing, and you're paying the mortgage, which at that point it becomes a liability. But for a duplex, when one person move out, there's still one person in it, still paying, right? So even if they pay out, your mortgage becomes, it was $1,200, but now you're only getting, your mortgage is $1,200, you was getting $2,400, but now you're only getting $1,200, right? Where your mortgage is still covered during that process. So the bank is more likely to lend. 4 unit, the exact same thing. One person move out, you still got 3 units bringing in rent, which makes it easy. Your cash flow goes down, but the mortgage is being covered. And that's the way the banks look at it 9 times out of 10. As long as it's bringing in some money, they will be willing to give you another loan for it. So that's what I would look at. Look for an asset-based lender. If you don't have any non-QM lenders, which are great lenders because they give you loans without all the docs. So if you're a real estate investor, new real estate investor trying to add to your portfolio, as long as they look at it as asset-based lending, they give you a commercial loan, and just as long as it makes sense from their perspective, they allow you to refi all day long at 4 or 5%, which is pretty high in today's standard. But 4 or 5% can still make you a bunch of money right now, right? You can still cash flow $500 a month. You can still cash flow $700, $800 a month, just depending on where you bought it and all that good stuff. But they are going to look for that type of thing. So it won't kill your ability to go do anything. Remember, when you're talking about trade lines, they're just piggybacking on your history. Nobody's picking back. You're not picking up anybody else's credit. They're just picking up your credit, your good standing credit cards that you have out there. You're not picking up their bad stuff. So with that being said, you should be pretty good as far as moving on and doing some things, right? So with that being said, hey, drop comments below if you got any questions you want me to answer via trade lines, real estate, entrepreneurship, putting money. I don't know about the stock market. I don't really look too much in that. A lot of people make money right now, but I think a lot of people are going to be losing money here pretty soon as well. So it's one of those things, but I definitely want to hear back from you. If you guys can school me on anything, definitely drop the comments below. I want to hear from you guys. And essentially, that's all I got. But with that being said, you guys know the rule. Keep winning. Let's go.